So we were conceptualized as a fleet electrification platform, which is enabling large fleet operators to transition their ICE fleets to electric and solve for everything that they see as a hurdle towards electrification. Financing is just a part of that problem. So what we are providing them is an entire solution. From a financing perspective, most financiers, the interaction between an operator and a financier is probably stage 3 or stage 4, as we call it. That's where an operator goes to a financier. Whereas when they come to Vertelo, they come to us at stage 1, which is going or electrifying their fleet is in their mind. That's when we engage with them, whether or not they should go electric, what OEMs, what asset classes they should choose, doing the unit economics, the route assessment, whether it makes sense or not. That's stage 1. Then if they're clear that yes, they want to go electric, then choice of the right asset. And the bigger problem that people have about electrification is that, I use that word, the phobia in their mind is, will the asset do what it is supposed to do? Will it get me or get the vehicle from point A to point B, which is the entire energy management solution or the entire charging solution that they have to. So we even get involved at that stage. Okay, you want to run a bus from, let's say, Delhi, Chandigarh, or Bombay, Pune, or Bangalore, Chennai, or Bangalore, Hyderabad. Do you have the right asset which can take you from point A to point B? Second, is there charging infrastructure at 3 points: start point, end point, and midpoint? Because that is what will enable you to take that journey in a seamless manner. So we do that. Then comes the third stage, which is, I finalized the asset. I've done rounds with multiple OEMs. I've chosen the asset. I need financing. That's stage 3 or stage 4, as you may call it. And then after that as well, so we tie in the entire AMC for the life cycle of the asset. In these asset classes, you can't get a EV service through a mom and pop shop at the roadside. It is to be done by the OEM only. In smaller vehicles, which is, let's say, cars or LCVs, it is still, there are dealerships there. But if you look at the bigger asset classes, like buses and all, it's all OEM driven. A lot of people create charging infrastructure. We embed charging infrastructure in large depots. So we create depots as well for the fleet operators, where parking, driver area, office operations, charging, spare parts that the OEM stores, OEM technicians, and the entire maintenance pit and everything is all done in that depot. So we create all of that as well. And so that's a longer term relationship, almost 7 to 8 years, because that's the life cycle of the asset as well. So we handhold the operator through that entire journey. So it's not just a transaction that we're doing at the financing stage. Financing or leasing is an integral part of our overall solution, but the solution is much bigger than that.
Right. Understood. Thanks for that comprehensive overview of what Vertelo does. So within for fleet electrification, do you have any priority vehicle segments that you're looking at?
Yeah. So at this point of time, see, again, we are backed by Green Climate Fund, Macquarie Energy Transition Fund. So these are climate impact investors. The objective is to mitigate the impact of climate change that's happening. So from a financing standpoint or a solution standpoint, we're focusing on asset classes that pollute more. We're not looking at two-wheelers, three-wheelers, and something to do with our capabilities as well, because that's a more of a retail play. What we are doing is kind of a wholesale play, bigger asset classes, bigger fleet operators, bigger OEMs. So it's a larger format across all our offerings, whether OEMs that we deal with, whether it's the operators that we deal with, or the asset classes. So cars, LCVs, buses and trucks, and the entire energy management piece or the charging infrastructure is what we are looking at right now.
And what differentiates Vertelo from other similar platforms who would be providing asset management and fleet management solutions?
So there are a couple of differences. One, the biggest difference is the amount of capital that we are bringing for this initiative. So we've in the month of July, August, we've closed probably one of India's largest funding raise for a platform like this. $405 million was raised to essentially charge Vertelo to help it do what it is supposed to do. That is one big differentiation. Second is we are only electric and we do the entire ecosystem play. Now, when you talk about competition, there is a lot of competition in the space that we do, but it's fragmented. Our biggest competition can be banks and NBFCs, but they will do only what I explained, stage 3 or stage 4, which is only the financing part, which I would say is very transactional. Uh, we also can compete with charging infrastructure providers like CPOs and all, but CPOs only do the charging part. They don't do the entire asset acquisition, AMC, fleet management, telematics, battery replacement. All of that is not done by them. Uh, what we will not do is we will not manufacture. So we
Hmm.
don't compete with OEMs. We actually partner with them. We are a facilitator between an operator and an OEM, and we bring them together either by introducing operators to OEMs or introducing OEMs to operators and vice versa. So we compete with the likes of banks, NBFCs, CPOs, but on a platform level, uh,
Yeah.
unfortunately, that doesn't exist. We would love competition to be there because that's what helped the market to grow bigger and faster. But you're right in terms of competition. The banks and NBFCs are the biggest competitor because the Indian mindset is still the same. Everybody wants to look at a transaction from an IRR perspective.
Mhm.
While we solve for that, what we also do is we bring in a lot of value add.
Right.
And that's again, when we deal with people, when we talk to OEMs, when we talk to operators, the capabilities that we bring on the table. So I happen to be only one. There are only one or two people in the entire Vertelo organization who come with a financial services background.
Hmm.
Rest is all automotive engineering, because that is what makes people understand how we differentiate ourselves. So we bring the entire expertise about. So the team that we have, the CBO is he was the chief commercial officer of Switch Mobility,
Right.
understands electric like the back of his hand. The head of engineering is a gentleman who was with Tata Motors for almost 1.5 decades, understands the engine. Everything that goes inside the vehicle is very well understood. The battery chemistry, what various components, how they come together. The head of operations is from Switch Mobility, Ashok Leyland background. So what we've done is we've created a team of people who understand uh, electric and the automotive part very well, and that is what gives the operator a lot of confidence. Because again, we're not just solving for financing. With in this business, money is very important, but understanding the asset, because it's a new asset. uh, what is it? It is supposed to last for 8 to 10 years, which all diesel etc also do, but they've gone through multiple life cycles of their own. Multiple, these are what we're talking about is Gen 1, Gen 2 assets right now.
Correct.
Giving that comfort to the operator that there is somebody who will not just provide you financing. I mean, we started by doing operating leases, which means the asset sits on my balance sheet. So
Hmm.
the comfort that the operator gets, that okay, Vertelo's team has signed up for this
Mhm.
asset. We get involved in the entire manufacturing process. In fact, our team is at the OEM's facility at the production line, making sure that the asset is manufactured the way we want it to be manufactured. That is the comfort that an operator gets, and he sees that value coming to him, which is far more than just a percentage point here or there on the IRR.
Can you share the current scale of Vertelo's current operations, number of deployments, how much money also you have deployed so far in the market?
So we are today, we started our first transaction in April 24, as you pointed out. That was the first transaction in Bombay with Chalo.
Hmm.
Half of Chalo's fleet was funded by us. The electric fleet is running in Bombay. Almost half of that fleet was funded by us. Now, happy to say that we've done a follow-on transaction as well. So 80% of Chalo's fleet in Bombay is funded by us. Uh, we've now done 10 to 12 transactions, close to 300 assets on the ground or about to be on the ground, largely buses and cars. By the end of this financial year, we would have deployed almost 500 crores of the capital. So we've raised 3,500 crore of capital, out of which 500 would have been deployed of our own capital by the end of this financial year. 10 to 12 transaction done. We've covered almost all asset classes that we wanted to cover. We've done buses, intercity, intracity. We've done cars across multiple use cases, which is B2B, ride hailing. We've done coaches. We've created depots. Our first depot is already up and running in Chennai. The second one is coming up by the end of this month in Coimbatore. There are more in the pipeline. We should probably, before the end of this year, also be able to do a truck transaction, something on the batteries as well as charging infrastructure. So whatever we thought, when we went out in the market to tell what Vertelo would do, all asset classes, all service offerings uh, are either up and running or would be up and running before the end of this financial year.
Oh, got it. Got it. So when the launch announcement was made, there was a figure quoted 1.5 billion USD to be deployed in,
Yes, yes.
in the coming 10 years. So
Yeah.
how do you plan to sort of distribute that quantum of funds among different aspects of the ecosystem you are addressing, different things you are doing as a platform?
So, so we've raised, let's say, $400 million. The other good thing is we now have an NBFC operational. We got the license from the RBI towards the end of November. So we now have a functional NBFC. Uh, Simple rule of thumb, we leverage three times at least. So $400 million, we leverage three times $1.2 billion to 1.6. So anywhere between $1.5 to $2 billion is what we envisage to deploy over the next 7 to 10 years. Out of that, the first year is always the slowest because you are making sure that the pillars are the foundation that you're wanting to build is strong enough, which is what we've done. The 2027 and 2028 will be the year of acceleration. Uh,
Mm,
you already have very large tenders that have just got released. The PM E-Drive just got announced earlier, 2 weeks back. There is another one that came in yesterday that yes, the government is planning another 6 to 9 thousand crore tender. Now that's just the bus side of it. If you're
mm,
talking about the bus side, just the CSL tenders that we're talking about are about 18 to 19,000 crores.
mm,
And that's just CSL itself. There are multiple state tenders coming in. You'll have, if there are 14 to 16,000 CSL buses coming, there are 4 to 5,000 state buses as well that are coming. And this will be an annual phenomenon. So if you're talking about a $2 billion only on buses through these government tenders, the runway ahead is pretty significant, and logistics is just about opening up.
mm,
The truck space, the logistics is a much bigger space compared to the bus segment. And that is now you have three or four tier one OEMs, Tata, Ashok Leyland, IPLT, Montra, Sany. They are coming up with their trucks. We already have first generation trucks on the road. So the runway ahead is pretty impressive, and we feel very comfortable to be able to deploy anywhere between $1.5 to $2 billion across these asset classes. To the specific point in terms of what percentage of our overall deployment goes where, 7 to 10% will go towards charging because
okay.
that we feel is the backbone, and the rest would go towards the asset classes. In order of priority will be buses and trucks because they are higher value, and then
Mm.
cars. Cars and LCVs then come.
Got it. Got it. Also, can you help us understand what is Vertelo's business model? How will Vertelo make money?
We have multiple revenue streams. And I think how we think we'll make money is by deepening our relationships. We follow a very relationship-led model rather than a transaction-led model. As I just explained to you, we get into a relationship with the operator at stage one. Even when he's conceptualizing to go electric is when we start talking to him, and the value add that we are trying to bring on the table is making this entire relationship very sticky. It goes beyond the IRR concept.
Mm,
We do realize that uh, we don't have the capabilities to match what a large bank would be able to do from a spread standpoint. But
mm,
and that's why we embed a lot of services or a lot of value add around that spread, which
mm,
the operator gets free of cost. I don't charge because my head of engineering is there and he comes with Tata Motors experience and has a deep understanding of the asset. No, we don't charge for that. That's the comfort that we provide. We realize that in any business of lending, I mean, we can also say we are in the business of lending as well. As lenders, we don't make money when we lend. We make
mm.
money when we collect. And we
Correct.
collect only when the operator makes money. So we realize that we will make money once the operator makes money. So our core business is making sure that the operator makes money. Because
Mm,
if he makes money, he's going to pay us. The OEM also makes money when the operator makes money. The OEM is going to sell the asset, the operator runs it. If the asset is standing on the road, he's not going to go back to the OEM again.
mm,
And no matter how tightly structured our contracts are, we do realize at the end of the day, the operator has to make money. So that's the most critical part of our business. And that's where we spend a lot of time ensuring that the asset does well. So we make money on the spread that we do. We provide an entire services platform, the entire depot and the charging infrastructure, or the entire energy management space that we create for the operator. So that's again an opportunity for us. There will be refinancing opportunities that will come because these are electric vehicles. Depending upon the use case, the batteries will go in for replacement every 3 years or 5 years, depending upon whether it is intercity, intracity. So that's again an opportunity for us to fund. So there is the spread component that we will earn from basis the lending that we do, and then there is a whole services offering that we create.
right.
And over the next couple of years, we want to create, not next couple of years, next couple of months. Actually, we're creating a tech stack as well, which helps the operator optimize the asset. And that's again a differentiator that we're bringing on because of our deep understanding of the assets. Every vehicle or every larger vehicle, not cars, but buses and trucks that we are financing, there is an embedded device into the vehicle which throws out a lot of stuff about the asset performance, not just telematics in terms of GPS and all, but even performance, power consumption, breakdown data, driving patterns. A lot of these then we try and put in a dashboard or a an intelligent format, give it back to the operator, which can help them optimize the asset and use it well. So those could be other revenue streams as well. So there it's a blend of services and financing income.
So, what are your thoughts on end of life vehicle management? How critical would that be to your overall business planning and profitability?
So, we do take some responsibility on our end for the lives for the entire life cycle of the asset. Most of it actually is done through the OEM. What we do is as part of our financing arrangements or leasing arrangements with the operators, we make sure that there is a end-to-end AMC taken specifically for the high voltage and battery parts from the manufacturers because that's where the expertise lies. We don't allow the operator to get those parts opened up. So high voltage, battery, and AC is something that we mandate. It has to go to the OEM only. The others, which is manpower, etc., has to be trained by the OEM, and then the large fleet operators can do the maintenance on their own. Uh, Actually, more than the end of life, as I said, batteries will undergo a replacement every 3 or 5 years. So that is one. So we are in the process of creating alternate use cases for the batteries that come back to us, because it's not just that they are obsolete and they'll be shelved and scrapped. There are multiple other use cases for batteries itself that is coming, and that is what helps. See, realizable value or RV, residual value, is crystallized when you sell the asset. The easiest way to defer the RV is develop alternate use cases for the asset. And that is what we are. So the asset, let's say if we talk about a bus, it has a 10-year useful life or a 12-year useful life. The batteries will, you can go through two battery replacements during that life cycle. So one is developing an alternate use case for the batteries, which is more visible in the next 2 to 3 years. There are use cases. There is energy storage or batteries to be used for different kind of vehicles. They're taken off to alternate uses. That's becoming more and more clearer. The whole vehicle is still something that I would say is 7 to 8 years away. The understanding is that since there are very lesser components that go into an electric vehicle, battery being the main, a battery replacement will enhance the useful life of the asset, which effectively brings down the RV risk for anybody. Now, RV is a science in itself. To figure out what the RV of a electric car or an electric bus would be, it's a difficult bet, which even the manufacturers can't put a number on right now. And if you're talking about the primary life of a bus being 8 to 10 years, for anybody to say that I know the RV of this bus is going to be, let's say, 25% at the end of 10 years, I won't say it's a very well calculated bet. It's just a shot in the dark. The same goes for even cars. Today, you can't put a value. So what we are doing is when we take assets on our balance sheet, we are minimizing the RV risk. We're taking a low RV on the asset. Not because we want to take a low RV. It's just that because nobody, not even the manufacturer, knows that. And the best possibility of deferring the RV risk is extend the useful life of the asset. That can happen by battery replacement. That can happen by good intelligent information about how to optimize the usefulness of the asset. So that is all what we are trying to do right now. So we are very bullish about the next year. We're just about to enter that year 3 months from now from a financial year standpoint. We are very bullish about what we see for ourselves and what we see for the overall industry as well. A large part of that has been facilitated by the government itself. The clarity with which the government is coming out with the policies haven't changed. The policies are actually acting as a big facilitator.
Yeah.
The tenders that are coming through reflect a very clear direction that the government wants to take in terms of electrification of whatever is in its domain. So I think that with that as a background and the government acting as a big facilitator, we are very bullish about what things hold for us, specifically the year ahead, because more from a Vertelo standpoint, we've developed a good pipeline as we enter the next year. There are a lot of signed contracts which are scheduled for delivery. See, the beauty about electric is, unlike cars, it's not available off the shelf. Just the gestation period of bringing an asset On the ground is a 3 to 6 month process. When you're dealing with the STUs, there's another added layer about the readiness of the depot infrastructure as well. So a
Correct.
lot of contracts that we've signed will get deployed in the next year.
Hmm.
And with the new tenders that have just got closed out, the PME drive, 11,000 buses, another 6 to 9,000 coming. I think the pipeline is pretty strong. 20 year ending March 27 and March 28 are going to be defining years in how we shape up. We look at from, let's say, 300 buses on our platform right now, we're easily looking at it crossing 1,000 within the next financial year. And obviously, cars and trucks getting added. Bus for us now is a mature product. Car is a mature product. Trucks, we are looking at first generation. We would definitely, close this year with give or take 100 trucks on our balance sheet, and that is again a number we envisage to grow leaps and bounds. So I think 27 and 28 are going to be defining years. A lot of these tenders, the depot infrastructure across various cities is coming along. Uh, the network effect of, if you look at the car sales, the way they're going, we're almost touching anywhere between 17 to 20,000 cars a month. The network effect of all of that, cars already getting to 4 to 5% of the overall penetration. First generation trucks coming in, buses becoming a mature product. I think the right place, right time feeling is well sunk in.
Hmm.
And it's just about executing it well. I mean, the
Right.
only risk that one sees for a platform like us is, can you raise money? I mean, uh, people can see us as a startup. We're actually not a startup. We're starting it up. Because startups don't get a seed capital of $50 million as a first tranche. We started with $50 million. So we were starting it up because the conviction was already there. Uh, so the risk that any startup has, whether it'll be able to raise money or not, that's behind us. We've raised the entire capital. The only other risk remains is execution, which is similar for any other entity in any stage of its life cycle. You have a plan, you have to execute it well. We have to put assets on the ground, we have to lend money to operators, we have to hope that portfolio performs well, both in terms of the credit performance of the portfolio and performance of the asset. We think with the checks and balances that we've built around what we do are good enough to help us see through that cycle. So very bullish on 27 and 28. The numbers will multiply because there is a low base effect as well.
Right.
And we are in no hurry to get it wrong. The market is out there to stay. Like any other space as well, first mover advantage is already there. It brings along itself the risk as well. But we are calibrating our pace. As I said, we are in no hurry to get it wrong.
Right. Thank you so much, Sandeep, for your time and for explaining very well how Vertelo is working, what are your focus areas, and what your priorities are. And I think your goals and priorities are very clear, and we look forward to seeing the numbers multiplying very, very soon.
Sure. And thank you. What better way to start the year with a discussion like this, which lays down the landscape for us as well, and probably more informative for the market as well.
Yes, definitely. Thank you so much. Have a wonderful year
Great.
ahead. Thank you.
Thank you. Thanks so much.